In the 10Q, the company says it may not have enough cash, or the cash levels may not be strong enough to start commercial production. They also are amending their annual filing with a going concern notice.
Hey, I'm Stephen and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. Sorry, I was just thinking about all the idiots who invested in Lordstown Motors. Yeah, by the way, I know there's a few of you watching right now. What else can I say? Hopefully you learn a lesson from this. Don't invest in garbage with obvious red flags. Shout out to Nicola. Now, for those of you who may have missed a couple of videos I've made on this obvious red flag of a company, let's head over to the YouTube channel now just quickly. First of all, we have a 25-minute video discussing Lordstown Motors' alleged false orders. Obviously, the CEO effectively admitting that their orders aren't serious. I went into detail on this. SEC currently inquiring into Lordstown Motors. Lordstown admitting their 100,000 reservations aren't serious. Bit of a red flag. Soon after that, short seller exposes another EV SPAC, a massive investor warning. Nicola Part 2, investors beware. Hindenburg doing some great research. A 40-minute video, which I suspected very few people would watch. I'm glad a few of you saw this, pointing out all of the red flags. And now today, the final nail in the coffin. Lordstown Motors is officially fucked.
Surprise, surprise, motherfucker!
With the tsunami of EV SPACs at the moment, and the torrent of idiotic investors throwing money at every idea hoping to catch the next Tesla, I just want to reiterate, I never ever give investment advice on this channel, but on the odd occasion, I do give how to not be a fucking moron advice, and this was one of those cases. Nikola Motor Corporation was another. So with that said, let's watch this slow motion train wreck as it unfolds. And by the way, since I know there's a lot of crypto lovers watching, and people who like free stuff, it's your lucky day. For a limited time, you can get up to $250 in free crypto bonuses when funding a new account on BlockFi, where you can use cryptocurrency to earn interest, borrow cash, and buy or sell crypto. If you want your free crypto, use the link in the description. It also helps out the channel. And if you'd like up to 2 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 1 free stock valued up to $250 just for opening an account. And if you fund your account with $100, you'll get a second free stock valued up to $1,600. Unless you don't like free stocks, that is. And if you're in Australia, the UK, or New Zealand, you can get a free stock with stake, also using the link in the description. Let's get back to it.
To Lordstown Motors, some news crossing there. Phil LeBeau has the details on Lordstown for us, Phil.
We'll take a look at shares at Lordstown, now down about 12%. Remember last Friday we talked about the fact that the company had not filed a 10Q? Well, they have filed it, and in the 10Q, the company says it may not have enough cash, or the cash levels may not be strong enough to start commercial production. They also are amending their annual filing with a going concern notice. Here's what it says. We require additional capital to implement our business plan, and it may not be available on acceptable terms, if at all, creating substantial doubt as to our ability to continue as a going concern. The company also says it does not have sufficient liquidity to fund commercial scale production and launch the sale of electric vehicles. And again, that raises the questions about its ability to continue as a going concern. And there you see shares of Lordstown Motors down more than 11% after filing this 10Q. Guys, they are supposed to, at least the plan is, as of right now, to hold essentially what they're calling Lordstown Motors Days all next week in Lordstown, Ohio. This was going to be a chance for them to show to analysts, the media, other people, what they were doing, what they're building, what they plan to build. Question is, will they have that? Will this company be able to come up with the money needed to start production?
Oh boy, I'm so surprised at this news. I didn't see this one coming. How could anyone possibly have seen this coming? It's not like prototypes are easy and volume production is difficult. It's not like there were any obvious red flags associated with this company beforehand, were there? Allow me to translate for those of you that don't quite understand the jargon there. Effectively what Lordstown has said is, look guys, we do not have enough cash to actually get to volume production. But not only that, we are very concerned that we're not actually going to be able to get the cash with reasonable terms, aka at a reasonable interest rate, etc., or without having to give away half of the company, because we're very concerned that there aren't enough complete and utter fucking morons, dipshits, absolute dullards out in the market willing to throw money at a company that appears all but certainly doomed. In other words, hey guys, the Titanic is officially sinking, abandon ship. Now, it is theoretically possible that there's enough morons out there willing to throw money at this company that they may actually get to volume production, but I'm giving that about a 0.000000000000069% chance. I'm calling it now. Lordstown will be bankrupt sooner than you guys can imagine. And this will be the first of many of these EV SPACs. I'll go into more detail soon. We're going to read a Wall Street Journal article that goes in a little bit more detail. But I just want to put this warning out there for those of you that can't be bothered watching the rest of the video. Don't be a fucking idiot, okay? If you see an EV SPAC, look at the company, try to understand what's their roadmap, how are they going to get to volume production, do they have the technology, are there any red flags, do they have a consistent track record of executing or delaying, shout out to Nicola, do they have actual real products in development, do they have functioning prototypes, do they have an honest and ethical CEO, do they have the right DNA in the company, do they have fantastic engineers, do they have the manufacturing chops to actually get things rolling? You'll find that the answer in most of these cases is no. Now, that's not to say that some of these EV SPACs won't actually maybe get to volume production and maybe be semi-successful. But I'm telling you now, 95% of the EV SPACs around today will not be in business in 10 years' time. Please, think first and invest second.
Phil, thanks so much. And the question, Mike, is will anyone focus on anything other than the two words going concern? I mean, 10% decline could be worse when you've got those two words out there.
For sure. Yeah, I memean, they're basically telling you that. The other question is, I mean, there's so many EV startups right now, of so many different sorts, that it's just unclear if this one company with a prototype and who knows what else, underlying the market cap, what remains of it, is necessarily going to remain viable. And that's pretty much what they're telling you.
Please just be skeptical before investing in these SPACs. That's all I ask. Tesla is a great example. In 2010, when Tesla IPO'd, they'd already, for multiple years, been producing and delivering functional vehicles, the Tesla Roadster, to customers. Versus these EV SPACs today, which might have a few pretty computer renderings and a bunch of hypothetical specifications with asterisks everywhere, targeted specification, aiming for XYZ range, nothing solid, nothing promised, just tentative stuff. And then they also additionally have the Mount Everest to climb that is called reaching volume production without going bankrupt. Please be careful. Now, let's head over to the Wall Street Journal article for a little bit more detail. Lordstown Motors says it doesn't have cash to start commercial production. The electric truck startup also says that it has doubts about whether it can continue as a going concern through the end of the year. Electric truck startup Lordstown Motors disclosed that it doesn't have sufficient cash to start full commercial production and has doubts about whether it can continue as a going concern through the end of the year. The disclosure Tuesday marks the latest trouble Lordstown Motors, one of several electric vehicle battery startups that went public last year through reverse mergers with special purpose acquisition companies, or SPACs. Lordstown Motors amended its annual report to include the going concern notice, which can flag survival problems for businesses. The warning comes as new challenges emerge for the 2-year-old company that is trying to convert a former General Motors plant in Ohio to produce electric pickup trucks. It has said its first model, the Endurance, will start production in September. If you haven't seen my previous videos on Lordstown Motors, that was never going to happen. A spokesman for Lordstown Motors said the company isn't moving back its September target for the start of production and hopes to raise more capital, potentially through asset-backed financing or a government loan program. Yeah, this sounds promising, doesn't it? Begging the government for some money, maybe. Probably their best option. He declined to comment on why a going concern warning wasn't included in the company's original annual report filed in March. Interesting question. Maybe some insiders were hoping to sell some stock before mentioning this to the public markets. Just saying out loud, I don't know why that came out. Do your own research. As valuations for Tesla and Chinese high flyers such as NIO soared, investors piled into a few dozen electric car newcomers. Sorry, I'm just going to re-quote this. Brain dead investors piled into a few dozen electric car newcomers that are looking to tap the growth potential of battery-powered vehicles. Lordstown Motors raised $675 million from its merger last fall in a deal that valued the aspiring truck maker at about $1.6 billion, with 0 products produced. I mean, a lot of dumb money out in the stock market, that's all I can say. The startups garnered heavy valuations despite a lack of revenue and the sizable capital requirements needed for vehicle production. Many of them have stumbled in their early lives as publicly traded companies, missing production targets, what a surprise, adding costs, what a surprise, and changing their business models, what a surprise. Lordstown Motors chief executive Steve Burns said on a call with analysts in late May that the startup would need to raise more capital to hit its target of building 2,200 pickup trucks by year's end. The company said at the time that higher than expected costs were accelerating its cash burn and that it would finish the year with between $50 million and $75 million on hand, which in the scheme of things, when you're talking about volume production of vehicles, is chump change. dangerously low cash reserves. In its filing Tuesday, Lordstown Motors disclosed that it had conducted an evaluation while preparing its 2020 financial statements and concluded that there was substantial doubts as to the company's ability to continue as a going concern in 2021. The company's independent auditors shared the doubts, Lordstown Motors said in the filing. Going concern notices generally detail important uncertainties to a company's future survival. They aren't a death knell, but can presage a debt default or bankruptcy filing. Take your pick, let me know in the comments below. Is Lordstown Motors going to begin defaulting on debt, or will they be filing for bankruptcy soon? Let me know your guess in the comments below, if any. Or are they going to be completely fine? AKA, do you still own Lordstown stock and wish you didn't buy it in the first place? Lordstown Motors also said in the filing that it found material weaknesses in its internal controls over financial reporting that could have led to material misstatements in its financial statements. Seems legit. Shares in Lordstown Motors fell sharply on the news, dropping 16%. I'm astonished it wasn't more than this, by the way, but anyway, let's move on, to $11.22. The stock had traded as high as $15.80 earlier in the session. Its stock price, along with that of other electric vehicle startups, has jumped in recent weeks, part of the broader brain-dead market rally among stocks popular with individual investors. After the sell-off Tuesday, the stock remains up 40% over the past month. The bell curve is real. Some companies like Lordstown Motors with followings among bullish brain-dead retail investors have used their lofty equity prices to issue stock to weather financial problems. AMC Entertainment Holdings, for example, raised financing in recent weeks thanks to its elevated stock price. And by the way, no fault to AMC. I mean, if there's a bunch of people piling into your stock, why not raise the capital? Lordstown Motors takes its name from the small town where the company acquired the closed GM assembly plant in 2019 for $20 million. GM was facing criticism from then-President Trump for its decision to idle the factory, which had been one of the area's largest employers since the 1960s. The Detroit automaker then struck a deal to sell the plant to the upstart, which had been created only months earlier. GM later forgave the purchase obligation, other loans and interest, wait for it, in exchange for 7.5 million shares of Lordstown Motors, or a 4.5% stake according to a regulatory filing. Now, just need to take a step back here. I'm sorry to say it, but the people steering the ship at General Motors are absolute fucking morons. The same thing with Nikola Motor, right? They partner with this company, they get a share of the company, they're literally taking a stake in an obvious scam of a company, allegedly do your own research, blah, 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 blah. Nikola, and they've done the same thing with Lordstown Motors here, taking a stake in a company that's soon to be worthless, in my opinion. I mean, oh, dude, like, GM are fucked, okay? Like, this is such a red flag for General Motors, okay? These are incompetent decisions, repeated incompetent decisions. The red flags for Nikola were there well before GM made this deal, and Lordstown, I mean, I just, can you imagine owning GM stock and, like, seeing this incompetence from leadership, honestly? Lordstown Motors was targeted earlier this year by short seller Hindenburg Research, shout out to Nathan, absolute legend, which alleged the company had misrepresented the strength of its truck pre-orders and its progress toward launching the Endurance later this year. Mr. Burns said shortly after the report's publication that it contained half-truths and lies in an interview with the Wall Street Journal. Tuesday's filing showed the company was starting to acknowledge its precarious financial state and its unrealistic production projections, Hindenburg founder Nathan Anderson said. The suck Elon's the short seller enrichment commission, the Securities and Exchange Commission also opened an inquiry related to the SPAC merger and the pre-orders of the company's vehicles. Lordstown Motors has disclosed that it received 2 subpoenas and said it was cooperating with the SEC inquiry. The company earlier this spring was late in paying a roughly $424,000 county property tax bill according to public records. Never a good sign. I mean, these things in companies, very occasionally somebody can overlook to pay a bill, but when there's lots of other red flags as well, it's generally another red flag. Lordstown Motors has since paid the bill and an additional penalty of roughly $42,000, the records show. The electric vehicle space was a red-hot market last summer, with brain-dead investors ploughing money into upstarts that had yet to produce a single car. Indeed. Driving the fervor was Tesla's 2020 stock surge and a rush on Wall Street to find the next challenger brand, and I absolutely agree with this comment there. Tesla has made it look easy, and even Tesla really struggled to get to volume production here. And now everyone's like, oh, well, if Tesla did it, everyone else can do it. I'm just going to throw money at the next Tesla because thinking hurts too much. And so therefore, I'm just going to automatically assume every EV SPAC will also be successful because I'm an idiot. A broader boom in SPAC mergers further fueled the rise of electric vehicle startups, giving the still fledgling businesses a way to raise capital from brain-dead investors and go public outside the traditional initial public offering process, aka IPO. About 30 companies specializing in electric vehicle manufacturing as well as related technologies such as batteries and charging infrastructure have struck deals to go public through SPAC mergers since March 2020 and raised more than $21 billion from investors. Now, I can't say that I didn't see this coming, and I'm sure most of the people watching this video aren't super surprised, but I know there's a small sliver of investors out there who, for whatever reason, just are incapable or unwilling to actually think before throwing money at these companies. Getting to volume production is almost an insurmountable challenge for a new electric vehicle maker. The existing legacy automotive manufacturers are going to look like they're doing a little bit better over the short and medium term. The problem for them is going to be behind the scenes. Their entire business is built on the internal combustion engine. When they transition to electric vehicles, they can, for a period of time, ramp to reasonable volumes of their new EVs, even though behind the scenes they're probably breaking even at best and more likely losing large amounts of money on these vehicles, while at the same time eviscerating their internal combustion engine vehicle with the superior EV products. The moral of the story here is that the vast majority of automotive manufacturers, whether legacy automotive companies like General Motors and Ford, or new EV SPAC startups like Lordstown Motors and all of the others that you guys know as well, the vast majority of these companies will not exist by the end of this decade. And most people in the stock market seem unable to grasp this fundamental fact. The moral of the story here is just think first, then think some more, then think even more, and then think even more than that. And then when you're finally done thinking, and you can't think anymore, then think a little bit more, and then, and only then, if it makes sense, consider investing in these extremely high-risk stocks. I'm going to be here as every single one of these EV SPACs goes bankrupt, and I'm going to be here as every single one of the legacy automotive manufacturers first merges or gets acquired, then ultimately ends up bankrupt as well. There'll be one or two survivors at the end of the decade, I'm sure, but I'm not smart enough to know who those will be. Please invest with caution. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. And don't forget, if you'd like up to $250 in free crypto bonuses with BlockFi, use the link in the description. You can also get 2 free stocks with WeBull and a free stock with Stake, also linked in the description. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. P.S. If you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.